What's happening, investors? AK from Fallible here. Today I want to talk about gold for all you gold bugs out there. Which, by the way, I don't know why you guys decided to call yourself gold bugs. Because nobody likes bugs. They're disgusting. You step on bugs. Except there is an exception. Flick from Bugs Life. Now he is a good bug. I like that guy. Anyway, the last time we talked about gold was about 2 months ago in April, where we actually got short. And it's been a pretty good trade for us. We pyramided a little bit and made even a bigger profit than we would have otherwise. We've been tracking gold ever since, and right now, gold is at a huge inflection point. And I know I talk about inflection points a lot, but I probably never actually explained what they are. An inflection point is basically an important binary event. So depending on what happens, either A or B, you'll get a good signal of where price should head to next. It's kind of like if you propose to your girlfriend. That's a binary event. If she says yes, then you're gonna get married and probably divorced in a few years. But if she says no, then you really don't have a good relationship, because the proposal and wedding are probably the height, and then after that it's all downhill. But if you are rejecting your proposal, maybe you should look into mail order brides. I hear they are a great value. But as you can see from this chart, the price of gold recently broke below its 5-year inverted head and shoulders pattern. Now 5 years is a huge pattern. This is like Tony Robbins' head and shoulders, real big. Now the price is still currently fighting with that line, but if it doesn't reverse, this will mean big trouble for gold. Now gold is really interesting to track because it acts as a signal for demand for US assets. So whenever gold rises, that means that investors are not feeling US assets. They're looking overseas at emerging markets. But whenever gold is falling, then investors are impressed with US assets, and they're usually pulling money out of the emerging markets and back into the US. And these US assets that we're talking about include the stock market. So if gold is falling, like it is, then it supports our bullish equity thesis that we've talked about in a bunch of our videos. So in addition to going long equities, it also makes sense to short gold on top of that. You can see how this works on this momentum chart. So the yellow line here is emerging markets over the S&P 500. So if it's heading higher, then emerging markets are doing better than US equity markets. If it's heading lower, then US equity markets are doing better than emerging markets. And the blue line is gold. So you can see here how they track each other. So when gold isn't doing well, emerging markets aren't doing well either compared to the US. Now in the next few weeks, we're gonna find out where gold is actually going. If it reverses here, then we'll get out of our position and may even go long. And our signal for reversal will be our stop, which we're moving up to around 1280 or so. Or gold could consolidate here before another big break lower, below its 200-week moving average, which is the blue line in this chart. If that happens, we'll probably see price head down to 1100, where its next big support is. Now, it is definitely smart to wait and see what price does here before you take any bets, because really we might have an idea of what we think is gonna happen, but we don't actually know. So wait and see and then make your move. But of course, this is just what we're doing in our portfolio. So before you make any decisions yourself, do your own research and stick to your own trading plan. What works for us may not work for you. Now later this week, I'm going to release a video describing why the Fed isn't on your side anymore in the markets. So if you want to see that, make sure you subscribe to this channel and hit that bell for notification when it's released. I'll talk to you guys again real soon. Stay fallible out there. Bye.